And you guys know from what we spoke about last week. And again, I can't thank you enough, Cody and Andile, showing up again for class. Really much appreciate. And it's not only that, it is to the benefits of our engagement this evening, but it also allows us actually to engage with class differently. Than if nobody is coming. So I really appreciate you for that. But I also understand, I would know that you guys are much aware of the implications here. Is that, like I said, I'm not going to come back on that, but those who are not engaging, those are the one that I'm addressing this to say that if you are on the list of the student who's not been engaging, the 3 year already are on my list of the student that are engaging, but I have about four or five. I will need to double check that that are not engaging, and that's not a good thing for them. So I hope we have effective care, and I've asked effective care to also try to reach out to those students. But should you be listening to this recording and you are one of those students and you know that you've not been engaging, and we have exactly 13 days, less a week minus one. No, sorry, what am I saying? 2 weeks minus 1 day. So you have about 8 working days to be ready for your test one, right? So time flies, and that's what I want to tell students. It's like if it is structured for you to engage on a weekly basis so that you gain a skill at the end of the semester. So, but if you are not engaging on a weekly basis, you're not going to gain the skill. And by the way, the only assurance we get that someone got the skill or gained the skill during the semester is the final exam, right? And that exam, obviously, it's a written exam on campus, as you can see there on your screen. There is the written and seen supplementary or unseen exam, and the dates would probably be either in surely in November. But if you look at time task one on the 19th and then on the 2nd of September, do you see? Do you see how far they are apart? Not that much. Do you see that? And that's the reason why I'm saying when I share with you something, please engage with the material. Please go through the video. Yeah, it doesn't matter to me if you're gonna speed up the replay, 1.25, 1.5. In terms of speed, you can listen to an entire lecture, 1 hour lecture in about 30 minutes. And you can grasp already what are the main things there. At least you have an idea. At least you know what is happening, right? Plus, you have the drive through. You go through the drive through. You go through step one, step two. You get small videos. They give you a general idea, and then you dive deep quickly into the matter. But guys, I'm not going to go back on the lectures. It is assumed that you are doing what you are supposed to do. And so this evening, we're going to be more practical, right? So we're going to already tackle a test or a task, like we call it, a task together. We're going to cover it. And one of the things that I wanted, it's also to expose you to, the, just you can see my screen there, right? So just to expose you to some of the tools that we have. Uh, see, this is an interactive way for us to go through it. And we are starting now, right? All right, so as you can see, this is financial forecasting, for your learning unit one. Just a second. Right. So just a bit of water there. All right. Okay. So forecasting, guys, what do you say about forecasting? Did you ever read? And by the way, the floor is open. If you can raise your hand or you want to write your question, definitely. This is your time. And I don't want to rob you of your time, right? This is your time. Ask any questions that you have. You went through the textbook. Maybe there's aspect of it or parts of it that you are not understanding, and so we can cover it, right? But in the meantime, like I said, these sessions, all of them throughout the year, it's going to be dedicated to practice. Because ultimately, I don't want you to go to a task, sorry, or the written exam and you've not practiced enough. We want you to practice so much that it becomes second nature. And especially what we want to build in you is that you can practice on your own. So you have access to everything. You can practice on your own. And by the way, I will share this with you. As you can see, like we said, we want to make AI our friend. So this, for example, is a nice build, right, for us to practice. So the board demands an accurate outlook. We need a forecast that balances actual data with realistic projections, right? So now we have forecast one, forecast two, actual, we have forecast three, we have next year budget. So when we talk about forecasting, what option do you think we should go with? When is forecasting done? You guys are really quiet. You're worrying me.
No, I'm not, I'm not. What do you mean? When is it done? In which context? Are you saying when is it done from the period or the
Yes,
situation? Is it
clearly
a
this is
timing
this is about
issue or
months.
is it a
Yeah. So is option pick any option here, for example. Is this accurate? When we say forecast one is done at 3 months, is that okay?
no?
All
It has to
right.
be 12 months in advance because my understanding is that, and to be corrected, remember you do a budget and which is mainly the expenditure. Then you need to then focus the income for that budget, the source of funding for that budget. And that will be a focus activity. So if your budget is annual, then the focus should also be annual.
Hmm.
That's my
Andile,
thinking.
Andile, we appreciate your opinion. Absolutely. Who can say something contrary to that? Is he correct? Guys, we are in class, so even if it's incorrect, it's not an issue, right? We are in class. So 3 months, it's too risky because so my point would be with what Andile say. No, forecasting is not done on a year basis. So forecasting is done, yeah, throughout the year. But there is exactly a 3 months forecasting, a 6 month, every quarter there is a forecasting. So you would use the data that you have for the first 3 months to do a forecasting for the next 3 months. And you will use the 6 month data to do another forecasting for the next quarter. So from 6 to 9. Are you guys getting my point? And you would use those 9 because forecasting has to do with we look at the data that we have available at the moment through the year and we forecast for the next quarter. Does that make sense? But when we're doing budgeting, Andile was correct on the budgeting part. You do the budgeting for the next year, right? So when you're doing budgeting, it's always for the next year, right? Does that make any sense? Right, so we'll come on that. Let me look at test one prep, okay? We are now going to touch on some multiple choice question, but this is a good time because it reveals how long you've spent in the module so far and what you're understanding or what you can see for yourself. I'm not fully understanding, so I need to be careful, right? Okay, so multiple choices here. Profit maximization is measured by what? Not a good question, guys. It is in your textbook. By the way, if you have your textbook, take it out. Have your textbook with you, right? But I would say you guys have been reading, so these things are not foreign to you. But if you are looking at your screen and you are wondering, wait, I don't understand, that is always a reminder that come on, make sure that you set enough time to study and to practice, right? All right, so profit maximization is measured by what? Any idea? I have Jess in the house. Cody is there. Ah, that was a good one. So Cody is saying by EPS. Can somebody remind us what EPS is?
Earnings per share.
Oh, like that, delay. Right. So you see the goodness of practicing is that we debate, right? So now let's move forward for further. Is Cody correct? Is correct because it's earning per share, right? But what that was earning per share versus what? So when you chose earning per share, what is the other thing you could also think of? Because remember, this is profit maximization, and profit maximization is contrary to what? Or not really contrary, but different from what? Learning unit one insists on something.
I'd say return on investment.
Return on investment. Before
It's
that,
just a
I heard
guess.
somebody. It's a guess. I know it's a guess. Adil, and you're welcome. You are welcome to guess as much as you want here. That's the platform. But I was hearing someone else say something else there. So profit maximization, your learning unit one speaks volume about something else than profit maximization. It doesn't demonize profit maximization, but it says that you need to look for what? Any business out there should seek what? Wealth maximization. Wealth maximization instead of profit maximization. You can get more profits now, but the company is not healthy. And then the company next year shut its doors because you were not looking at long term. So we are saying profit maximization is good, but profit maximization is short-sighted. It's only for the short term. It's not looking at the long term. Do we understand each other, guys? So when you're looking at wealth maximization, it's much better than profit maximization. Cody, I see there you're saying it doesn't take into account cash flow. Profit maximization takes into account cash flow. Perhaps you mean it's not taking into account discounted cash flow. You know, because you need to look at the interest there. And obviously money depreciate with time. The value of money is not the same today and next year. You could buy bread for 12 rand this year, but next year the bread becomes 16 rand. So what happened? It's the same bread, but why are you paying more? Because there are other things that also are added on top of that. Interest rate is added, inflation is added. Do you get that? So you need to take all those into account when you're analyzing profit. Are we clear, guys? All right. So you don't just say we made 10 million last year. This year we made also 10 million, so we are doing well. No, but there are other factors that you need to take into account, and that's what is covered in Learning Unit 1 and Learning Unit 2, guys. You should be able to understand this by now. So, but now let's talk about short-term investment, because I said that profit maximization is short-term. It's not long-term. When you're looking at the long-term side of a business, you are talking about wealth maximization. So you might not get as much profit. For example, Facebook was not getting any dividend, any profit for many, many years. But yet it's one of the most the wealthiest company out there. We're talking about valuation. It's the one of the most valued companies out there on the stock exchange. So its value is very high, but it was not producing any profit, making any profit. And so is the same for many companies in big tech. Many of them, you will find that they're not making any profit. They're not making any profit. So you need to know the difference between when you're looking at the cash side of things and the wealth, because the products, what they are producing, the technology that they have, the knowledge that they have, that when you value that is big. Do you get it? So there's you need to look at the assets of the company, the profits. They might not be producing any profit, but in terms of asset, in terms of equity, oh, they're big. Are you getting it, guys? So you must make the distinction between your income statement, and your balance sheet. Your balance sheet. What is in your balance sheet, guys? A quick question, just to check that the people are here. What is in your balance sheet? Ooh, guys, it's getting scarier here. Balance sheet. Remember your balance sheet. Asset, equity, liability. Asset, equity, liability. We all have a balance sheet. Andile has a balance sheet. Cody has a balance sheet. Jess has a balance sheet. Come on, guys.
And retained income or retained earnings.
Retained earnings. That is on in your equity. That you place it in your equity. You need to know where you place it, right? So that will be in your equity. But asset equal equity plus liability. Do you know that? Asset equal equity plus liability. Guys, I'm not going to repeat this. You should know this because this is accounting 101, right? So this is the matter. This makes sense of all that because this is the module now that is going to link your balance sheet and your income statement and any other statement out there so that you can have a broad picture of everything. That's the purpose of financial management. We manage all these things, right? We manage the assets. So we need to have a broad view of everything and the purpose of everything and the impact of everything, right? So We said EPS. So what is an example of a short-term investment decision? Because sometimes you are called to make long-term decisions, sorry, and short-term decisions, right? So, but what is an example of a short-term investment decision? Investment. In your life, guys, that's the
For me,
part.
it's purchase of working capital or stock.
Working capital or stock. Absolutely. Ha, I like that, Andile. Thank you. Finally, Andile rescued us. We were sinking on this boat, guys. Welcome to finance. Guys, you will never go wrong with finance if you think about finance first. The first purpose of finance, it is going to help your own financial balance sheet. All right? We all have a balance sheet. We all have assets. We all have some debts. Some of those debts can be long-term debt, and some of those debts can be short-term debts. Some of the assets we have are short-term assets, and some of the assets we have are long-term assets. That's all. There is no mystery. It's like you are looking at your own financial position. It's a financial position. How much debt do I have? How much equity do I have? How much asset do I have? Come on, guys, don't complicate this. This is very simple. And plus, please do your reading. Do not play with finance, but it's easy to understand, right? So, but when we are saying a short-term investment decision, it's relatively, it means that it is for up to a year. But when you start to talk maybe about a bond, investing in a house, that's a long-term asset, right? We understand that, okay? So the same thing that is happening at the level of a person happens at the level of a juristic entity like a company. It's a person. It's a juristic person. All right. So the quantity of inventory or stock purchase, just like Andile said, that's a short-term investment. Now, I want all of you to be involved. Please be involved because we need to have this conversation together. Because it tells me if you've studied or not, if you understand or not. Now, the budget is drawn up for what? We touched on that. We touched on that on delay. What do you say? Jess, Cody, a budget is drawn up for what? I think it's the time period. Yeah, Cody, but what is that? In terms of period, what period is that? It's not a budget for the next 5 years. It's surely when we're talking about the budget is for which period? Which period in future exactly are we talking about, guys? The next what?
Next
The
financial year.
next financial year. Ah, I think I know what I think on delay you are already on that thing. That's how you know the answers. Adile is on this thing and he's getting the answers already. But it does not matter. That if you do that, I'm even
Which thing are
encouraging
you
you
referring to? I was just guessing.
I'm referring about the app that I shared with you. If you
Oh,
clicked
no,
on
no,
that,
no.
you can go through
Oh,
this. Oh,
oh,
you're
is
not
it?
there.
No, no, no.
Oh, you don't have. No, it doesn't
No, I
matter.
don't have. Yes, yeah. I'm
Yeah,
just
no, all good.
yes, 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 yes,
You are guessing.
yes,
But
yes.
you're guessing it right, Andile. But my thing is that if you know this, I'm so happy because that means that you've covered your learning. You know, this cannot lie. When a student understands this, is that they have done the part at least of going through this. And that's important, guys. Please, this is my encouragement to all of you. Don't wait for, close to yes, the first task to start now studying. That's the worst way of preparing yourself as a student. And by the way, I call that basically a failure mentality, because that will most likely, if even if you pass, you're always passing by chance. So my encouragement to you guys is that do your bit every week. It's going to be really helpful, right? I hope all of you understand. So an example of a stakeholder in an enterprise. This is another good question, by the way. This is covered in your learning unit 1. This is simple basic finance. What will be an example of a stakeholder? Jess, Cody, the two of you have been too quiet.
Stakeholders ranging from people who are investing money in the business, so they want to see a return on their investment. They don't want to just put money in the business and not see anything, come to their side. Or there's also the creditors, because they want to know, are they going to get their money for supplying goods to
Exactly.
the business?
Well done, Jess. And guys, let me again say, remember, guys, I told you last time, I say there's no need, if you are memorizing a single thing in this course, you are making a mistake. There is nothing that you need to memorize. Finance is so simple. It is as simple as English, right? Holder. It's a person who has a stake, who hold a stake, all right? Shareholder. It's a person who has a share. What is there? What is there to memorize in finance? So my think is that you, um there is, yeah, right, cool. So guys, so 100% to Jess there. She's definitely on the board there. There is the shareholder, there is the stakeholder. A shareholder is a stakeholder, but a stakeholder is broader, but it's a vested interest, right? It is a vested interest. So a creditor, exactly like she said there, a creditor will be an example of a stakeholder. Drawback for profit maximization. Now, we were talking about that. Remember, I juxtapose profit maximization and wealth maximization. I told you that those two things, they are very clear in your learning unit 1. These are not the same thing, right? And I actually made you understand the difference, because profit maximization will be short-term sighted and wealth maximization will look at the long-term interest of the company, right? So what will be the drawback? If a company like, no, we're just gonna focus on profit, what would be a drawback? Or what would be a risk? What would be consequence? Obviously, a bad consequence of that. Obviously, it's at the expense of the company. Now, guys, all of you quite quiet. What is happening? Yeah. You have
Still
your
thinking.
textbook with you. Come on, open your
Yeah.
textbook. Andile, what do you say?
No, you're saying the drawback of profit maximization.
Yes.
Uh, yeah, basically the downside of it, it's more like loss. It's a loss for me because you're gonna
It's a
incur.
loss.
Or you mean what is not good about it? So that I understand what you mean.
Yes.
Yeah.
Yes. Yes. Is that you are
Ah, oh
short-sighted.
yes. Oh yeah,
You are
yeah,
not
yeah.
seeing the
You
long
said,
term.
yeah. You don't focus on sustainability, of course. Yes, yeah.
Woo! I like that.
Yeah,
I like that
yeah,
word.
yeah. So it's
I like
short
that
term,
word.
yes, yeah. You're looking at you're not focusing on the bigger picture, even though it's at the end of the day, ultimately, once you are sustainable, you're gonna measure your performance based on profits. But it overall, over a long term period, it's not a good indicator of sustainability.
Brilliant. brilliant. I like that. So time value for money, for example, is ignored, right? So you would think that you have quite a lot of money, but you need to put that. I think I raised that with Cody to say that when we were looking at Cody talked about the cash flow. Obviously, you will look at the cash flow, but you would ignore something as fundamental as time value for money, right? So it might look that you are doing well, but it's not sustainable, and sustainability is the word that Andile used. Very good, very correct. Well done, guys. So but this part is in your textbook. Cover it quickly, and you have your notes. Primary responsibility of financial management, financial planning and analysis, right? The reason why I wanted just to go a bit faster on that is because this is something that you should know. There is the primary responsibility of financial management. They are in your textbook. Please ensure that you know them. But this is so important. And that's the reason why I'm saying this is the difference that you would see very much between finance and accounting, is that we're going to be more analyzing. We're going to be more looking at the planning aspect of it, more planning aspects, more. You see, accountants, you can see them as historian. They're more analyzing what happened. But finance even goes a step further. Yes, we see what happened. We can analyze what happened, but what else will take place? What happened showing us about the future? Isn't that beautiful? Financial planning and analysis. That's a very, very important. And like you can see it, it's a primary responsibility of financial management. So at the end of the day, you guys would understand how to plan, how to analyze, right? The information. It's not just the numbers. Yes, you are able to calculate a number. Even on your test, you calculate the number, but you need to explain what that means. What is a purpose of financial management? Come on, guys. I'm forcing you to go to your textbook. So if you have a textbook, open it. You're not cheating. You are in class. What is the purpose of financial management?
I'm not on the textbook, but I think for me it will be about financial planning.
Financial planning. Still.
Yes.
Jess, Cody, awfully quiet. Your silence intrigues me. What is a purpose of financial management? I would say it is in the word. Ooh. Cody says to make sure the business has the funds it needs, make sure it uses them efficiently. Absolutely. All right. So initiate, consider, manage. The word, I told you, the word was there. Manage, management. We are managing what? The financing, right? So manage areas of financing on behalf of a business. But obviously it's not only managing, you also need to see that there is that part of initiating, right? Considering. Another word for that, evaluation. We're going to evaluate, okay? Should we invest in this? Should we invest in that? Which investment is better for us? And how are we going to get, by the way, the money for it, right? Very, very important. Like I told you last time, what did I tell you? You have the 3 branches of finance. What are they? Accounting. What are they?
Accounting. accounting, or now you say
Investment. What are
investments,
they,
yes,
guys?
and
What
financial
are they?
money.
And financing. Financing. Remember, the financing is basically how are we going to get the money? That's the financing. So you might feel, oh, this is a repetition. Financing. But what is finance? Financing is financing. It means, how are we going to get the money? Are we going to borrow the money? Are we going to sell share? Are we going to call for partner to partner with us so that they can give us the money? Or are we going to go to the bank? When you want us to, come on, guys, you know this. So that's the financing part. The financing part is very important because we need to know if we are taking too much debt, is that a risky move or not? Just like you do for yourself, for your own house, home. You want to buy a car. Should I take financing or should I pay cash? That's financing. Come on, guys. That's financing. Yes, Andile.
So at least so we know where we're gonna invest money in, which is assets or working capital and all those things. From
So
financing point of view, is the theory only two sources of finance, equity or debt, or mixture? Is there any other source outside that of financing?
that's a brilliant question. Andile, that's a very, very brilliant question. But obviously, the answer I will give you as we move along with our course. That's why you are doing this course. But it's a very, very, very good point. Those two are the two major sources of finance. But somebody, let's say someone who is a sole proprietor who's already rich, maybe he's not using those two sources. He's using his own money. So that's another source, right? So yeah, but a very, very, very good question. I like that question very, very much. But that's good. Guys, what have we done so far? I want you to link this concept to basic your basic self, your own financing. When I look at you, I see a financial person. So there's nothing in finance you cannot be able to understand because you do also have your own finance side aspect of you. So sometimes when you wrestle with a difficult concept, try to understand it at the level of yourself. It makes it easy because we are just taking what applies to a normal person. We apply to another person called a company, a business, whatsoever. It's still a person. By the way, in law, we call that a juristic person. So there's no difference between a company and you. There's no much difference between company finance and personal finance. That's how interesting it is. And that's how you're going to enjoy finance because it speaks about real matters. It's money talks, guys. We deal with it on a daily basis, right? So I hope you are excited about this module. I just tried to stimulate your excitement a little bit there. Right. So an example of long-term investment decision. Now, guys, you need to go now quick. Now there's no jokes anymore. Now you know how this works, right? It goes with the logic. And this tool is created precisely for that, to help you prepare for test one. Look there, it says test one prep. So it's an application that I've created for you that really works on a logical aspect of you preparing for test one, right? So an example of a long-term investment decision.
Property.
Easy, easy, easy. Well done, well done. Land, bonds. Sometimes when you have to take these long terms or invest in equipment for your business, you need to take a long term. And that's why most of the time they're going to call it a bond, because you are bonding, tying yourself for a very long time. Do you see how this finance is amazing, right? So it's a bond. You're bonding yourself. So this is not a one-night stand. It's a long-term relationship that you are engaging yourself in, right? So long-term investment decision would be a merger and an acquisition. You hear that all the time. No, it's not a short-term thing. It's not a, like I said, it's a relationship. It's not a one-night stand. All right. Sorry for using that term, but I'm just yeah. But it's a merger and an acquisition. You are merging, or you are acquiring an asset, or you are acquiring another company or another branch. It's a long-term thing, right? Are we on the same page, guys? You worry me because you're too quiet, but you can use the thumb up to say we're good. Are we there? Are we there? Are we talking reality here? Thanks, Cody. Jess, okay, thank you, Andile. We are talking about real matter. I'm just trying to make it fun, but this is real. This is real, right? So, what's a form of equity? We were talking about the equity. Remember when I talked to you about the balance sheet, your balance sheet, you kept quiet, and I was like, guys, asset, equity, liability. So, but what is a form? The honest capital, absolutely, absolutely. Cody, well done on that, right? So, honest capital. Andile did mention actually retained earnings. Absolutely, that also can be added to honest equity, right? That's right. That's right. So now, a consideration when making decisions as a financial manager. What would be a consideration? What do you need when you are trying to make a decision as a financial manager? What do you need to consider? Come on, are we talking?
I think the what you need to consider when you make what long-term investments or just when you make a
Oh,
financial decisions.
oh, Andile, I like that. So I like what Cody is writing. I like what Andile is saying because Andile is looking also at the timeline. Are we talking long term? Are we talking short term? Yes. That's what we're talking about, risk versus return. Guys, I'm so excited, right? That's good. So, and don't ever forget the elephant in the room must always be, is it for the long term wealth maximization of our shareholders? Yes, all of those things that you mentioned, they are important aspects of this. So when you're looking at risk versus return, it's always it should always be at the back of your mind. Always the most important aspect must be wealth maximization of the shareholders. Do we agree, guys? Shareholders. And there's a reason why we say shareholders, not stakeholders. Not stakeholders. Yes, you need to also be mindful of your stakeholders, but primarily in finance, not in corporate management. In finance, it's first the shareholders. Do we get each other? Money talks. There are people who took the money represents their sacrifice, their savings, and they invested their saving, their lives into a company. It's not for you to play with that money and be careless with that money. Like I said, people just, people love so much money. People love but money is something. Money is speaks of the sacrifice of people, the work. Do you get what I'm saying? Right. So a secondary responsibility of financial management. What will be the second responsibility? The first responsibility, we covered it. It was about the planning and analysis, right? P&A. Always remember P&A. Very important. Planning and analysis. But what is the second responsibility of financial management? Dividend decisions. All right? Dividend decisions. So we're going to invest into this and into that. But when the profits come now, we have to decide, are we going to give out dividend or not? Because who are we talking about? When we are talking about dividend, who are we looking at? Our
shareholders.
shareholders. Come on, guys. This is circular. Don't doubt yourself. We are talking, it's a conversation. It's a conversation, guys. How are we doing in terms of time? Do you see how the time even flies? That's what I'm trying to tell you. We're not going to have the time to cover everything when we come. And that's why you must show up, but you must also practice. You must also prepare yourself before class. Right? So dividend decisions, we were talking about. Okay, let's move on to the main goal of financial management. What are the main goals? What is in this? It's just the main one. The main goal of financial management. And here, this application is helping us really to nail it. What is the main goal of financial management? Don't worry, I will share this application with you for you to use after class, right? So that you can play with it around. Trust me, it has been created for you. But what is the main goal? Textbook, open. Textbook 101. What is the main goal of financial management? We already talked about it. We talked about it. We talked about it. We talked about it. Ah, well done. Exactly. Why are we repeating this? It's for the purpose for you never to say that, oh, but I didn't study. No, you must know it. It must be even in the middle of the night. If I call Andile, what is the main goal of financial management? Of course, the shareholders' wealth maximization. You see what I'm saying? That's finance. You can't fail this module. You choose to fail this module. And I'm being serious. You can't fail this module. So okay, there is another aspect, cash management. What does it entail? So we are talking about cash, right? You know cash. Absolutely. Right, Cody is there. All right, so we are just managing one important aspect. It is the working capital. Yes, there is a cash flow inside because there's cash flow. Cash flow means that there's in and out. Money that is coming in, money that is going out. Money that is coming in, money that is going out. But you must always remember, cash talks about the short term. And Dile talked about that. And the short term has to do with what? It has to do with your short-term asset and your short-term liability. Short. In, out, in, out, in, out. Short. Working capital. Current assets minus current liability. Do we get each other? Are we on the same page? Jess, Cody, is this crystal clear? So when I'm asking you next time, what is working capital? Working. It says it. It's a working capital. It's a capital that is working. That's the engine of the business. We will cover it in more details in Learning Unit 3, but you must already have it in mind. There is an engine that is functioning every single month to month, day to day. And it has to do with short-term things, short-term asset, short-term liability. Do we get each other? Those are the grinders. So you are starting to understand what finance is all about. We are talking about the real things, right? So liaising with financial institutions, banks, brokers, etc., to raise funds on the most favorable terms. What is that called? When you as the financial manager must go to the bank and check and ask bank one, How much interest are you gonna give me? Bank 2, how much interest are you gonna give me? What are you doing?
Typing.
You are? Jess, we can't hear you there. It's cutting.
Sorry, sir, can you hear me better now?
Yes, much
Okay.
better now.
Now I was saying you are negotiating. It's
Ooh.
financial negotiation.
Well done, Jess. Come on, guys. This, by the way, it's not something you're going to read and say, I read Learning Unit 1, yeah, at that time. No, this must be part of your language from now on until forever. This is how you talk. This is how you understand. Because finance, it's a daily occurrence in your life. So that's how you're going to do very well. So I have this conversation all the time. These are real things we can talk. You see, we can have, do you see how this time is spent as a conversation? A focus is drawn up for, oh, we were talking about that. It's talk probably for a period, right? What period is that?
Next financial year.
No, Cody. No, Cody. Next financial year, that's the budget. Remember, there's the difference between the budget and the forecast. Remember, I said forecast is short term and usually a period of what?
A quarter.
Quarter. So it's the current financial year, and it's always gonna be for a quarter. So you have 3 months of data, and then you forecast for the next 3 months, and then you use that 6 month to forecast for the next 3 months. Remember, that's the difference between a forecast and what? A budget. A budget next financial year. Forecast is what? In this current financial year, and especially it's targeting the quarter. Are we okay, guys? Right. Agency problem. So guys, we have only 6 minutes. I'm going to submit this to you so that you can practice. Please do me a favor. Can you practice? Can you practice with this app tonight and this weekend so that you are done with this part of your prep? And what I want you to be doing is that go back to test 1 prep in your OneNote. I have already shared with you all test 1 for the past maybe 3 or 4 years. Can you start practicing them? Can you take in that? So if you still have trouble to finish Learning Unit 2, start making your way through the drive-through to complete Learning Unit 2. And I want you to practice. I want you to look at questions for Learning Unit 1 and questions on Learning Unit 2 and practice. Go for the jugular. Don't waste time. Look at the paper and try to see, oh, let me just do it on my own first and then check the answer. Always do that. Try to attempt it on your own and always look at the answer. There you will find out a lot on the mistakes that you are making, and then you can prepare yourself much better. But this is the end of Learning Unit 1, isn't it? The agency problem, which you know. Define the agency relationship and the agency problem in your own word. Can somebody attempt that? So that we can tell each other goodbye. Agency, like I told you, it's finance. The definition, whatever you're looking for, is there in the word itself. So don't look far. Don't start looking to the ceiling and all that. No, that doesn't help. Look at the agency relationship. Agency. What does that tell you? There is who and who. There's an agent and and the principal, right? Come on, guys, come on. Who's the principal? The agent is working for who? We talked about the who. Who is the who? Who is the elephant in the room? Who do we talk about every day in finance? Come on, guys. Are you there? Andile, Cody, Chess. Learning unit one. Of course, the principal is the shareholder. Who's working for the shareholder? Who's the agent? Yeah, but who is he? Yes, he's an agent, but who is he? He's called the management. And that's why we are studying financial management, guys. So if you want to write test one today, you can see that you will get a lot of things wrong, right? So get it right. Get it right once and for all. Like I said, it's easy stuff. It just requires you to go through this course, and it's easy stuff, right? So waste no time. So the management works, and there is a conflict, right? The agency problem. What is that conflict? What is happening? Obviously, there will be a conflict because management is there, is doing the business. They see the reality. The shareholders, they don't see the reality. So there will be a conflict. All right, so the agency relationship refers to the relationship between the management and the shareholders of a company, like we said. Now, the agency problem arises when the objectives of the financial managers are not aligned or clash with that of the business. So list 3 possible ways in which the agency problem may arise. What can you think about? Guys, this is a good one. Please, just before we go. What can that remind you of? For example, what? Maybe the financial managers are looking at the short term or profit maximization at the expense of what? The long term, right? But guys, this is in your book. Please go through it and make sure that you understand. So financial manager may want to improve their personal wealth. They might be looking out for themselves. They might desire job security for themselves, right? Yes. Excessive spending on perks, salaries, you know what they do, right? They may be searching for employment incentives, bonuses, exactly. So the manager might be inefficient and overlook advantageous investment opportunities. But you can see the point here is not even to memorize. What is this all about? It's about just normal, pure logic, something that you can understand. This is 101, nothing difficult. So when you close learning unit 1, you understand you can take a test at any time, you see. So it should not bother you. So how does the agency problem impact corporate decision making and performance? That's a very good one. So I'm going to take this and share with my 3 people, especially with my 3 people who came to this lesson today. Try to click on it and to see if it's working for you on your side. But like I said, you need to practice after this because I don't know, maybe because I'm paying for this tool, it might stop working from your side if you're not using it. So please use it while it lasts. So just a quick one. Did you enjoy the session?
Yes, from my
Come
side,
on.
very
Yeah,
informative.
thank
Thank
you,
you.
Sai.
Very informative. All right, guys. This will be the format for the rest of the year. I will give you the time for you to go through the lectures. The lectures are there. The interactive tools walk through for you to see the videos and all that. They are there for you. My thing is, I want your commitment to do what you are supposed to do, to just take a minute to go through it. If you are not even setting the time to go through it, or you are too thinking, it's going to take me too long, it's boring, it is not. So please do your part, your bit every week, your small bit every week. And you will see that this is going to last because it is a skill that you are building. So don't study for the exam. Anybody who's out there who's planning on studying close to the exam, you are not doing yourself a service. It's not going to help you. All right. So, guys, because of time, I will need to say goodbye for tonight, but we shall be back again next week. All right. Have a great one. Until
Thanks,
then,
sir. Bye.
but let's keep in touch, please. Let's keep in touch in our chat on WhatsApp. Should you have any other question, feel free to reach out.
Thank you, sir.
Thank you.
All right. Keep well,
Bye.
Jess. Bye, Goody.